I've talked before about how copious amounts of money printing are causing asset price bubbles, and yet we've not really seen the consumer price inflation that everyone was expecting. It looks like 2021 will be the year that the I word enters our vocabulary for the first time in a generation. Most developed economies are expecting a strong bounce back in GDP growth as pandemic restrictions ease. America's GDP grew by 4% in the first quarter, but there's no sign of the Federal Reserve cutting back on its $120 billion a month that they're pouring into the economy. Copper prices have gone over $10,000 an ounce for the first time in more than 10 years, while many container shipping rates have quadrupled. The Dow Jones Commodities Index, which tracks metals, agriculture and energy prices, is up over 75% in 12 months. The price of milk has risen 50% across Europe, and packaging costs are up 40%. So the burning question is, how much of these higher input costs will companies absorb, and how much will be passed on to consumers as higher retail prices? The latest US job figures were disappointing, and we're yet to see the full impact as furlough schemes end and bounce-back loans have to be repaid. Companies are talking more about inflation than they have for a decade, so it's clearly on their agenda. It's almost certain that politicians want inflation to reduce the real value of their record levels of debt. So don't be surprised to see consumer inflation nudging up to 3 or 4% later in the year, while jobs remain hard to come by and wages are flat or declining. That can only exacerbate the gap between the haves and have-nots and could trigger the biggest winter of discontent since 1979. Maybe it's time to top up on gold and Bitcoin. Thanks for watching. If you'd like to see some previous episodes, click here. Don't forget to like the video, subscribe to my channel, and ring the bell so you don't miss out on any future episodes.